the altcoin season that never came. Here's the real reason why. Alright, let's talk about the elephant in the room that nobody wants to address. Bitcoin just hit new all-time highs. Ethereum's been consolidating, and your altcoin portfolio still down 60, 70, maybe 80% from where you bought in. You've been waiting for altcoin season. Everyone on Twitter keeps saying it's coming, just wait. But here's the thing, what if I told you it's not coming? At least not the way you remember it. Today, I'm going to show you exactly why the altcoin season you're waiting for is dead and what replaced it. Quick disclaimer before we dive in. Nothing in this video is financial advice. I'm sharing my analysis and perspective on market structure, but you need to do your own research and make your own decisions. Crypto is risky, and you should never invest more than you can afford to lose. Alright, let's get into it. So first, let's establish what we're even talking about here. Traditional altcoin season followed a very predictable pattern. Bitcoin would rally first, right? Then Bitcoin dominance will peak, and suddenly all that capital would start rotating into Ethereum, then into large caps, then into mid caps, and finally, in that glorious last phase, into absolute garbage tokens that would 50x in a week. 2017, we saw this. 2021, we saw it again. Every random DeFi fork, every dogcoin, every Ethereum killer was printing money. You could literally throw darts at a board and make 10x. And the retail playbook was simple. Wait for Bitcoin to pump, then rotate into altcoins before the masses catch on. Time it right, and you'd outperform Bitcoin by 5x, 10x, sometimes 50x. But this cycle, Bitcoin's up over 100% from the lows, and most altcoins are still underwater. So what happened? Here's the first thing nobody wants to admit. The big money isn't playing the same game anymore. When I run AI analysis on capital flows, something jumps out immediately. Institutional adoption in this cycle has been massive, right? We've got Bitcoin ETFs, we've got BlackRock, we've got sovereign wealth funds getting involved. But here's the kicker, they're buying Bitcoin, some are buying Ethereum. They are not buying your low cap metaverse token. Why? Because they have compliance departments. They have fiduciary responsibilities. They can't explain to their investors why they bought a token with a $20 million market cap that some anonymous anonymous team launched 3 months ago. In the old days, retail money dominated. Retail money is dumb money. No offense, myself included. We buy hype, we chase pumps. But institutional money, they stick to what they can justify, and that's Bitcoin, maybe Ethereum, and that's pretty much it. So that entire rotation pattern we relied on, it's been short circuited as a first step. Second reason, And this one's huge. The regulatory hammer has been coming down hard. 2021 projects could launch tokens with barely any disclosure. Teams could be anonymous. Tokenomics could be completely predatory, and everyone just accepted it because hey, we're all gonna make it, right? 2024, the SEC has been going after projects left and right. We've seen massive enforcement actions. Exchanges are delisting tokens to avoid liability, and VCs who funded these projects are now sitting on bags they can't legally dump. What this means practically, projects are launching with way more conservative tokenomics because they're scared. Less risk means less explosive upside. The 100x gems that changed your life in 2021, they'd probably be shut down before they even launched today. And regular people can feel this. The excitement's gone. That feeling that you're getting in early on something revolutionary before the government even knows it exists. That's over. Now it feels like you're buying securities that might get you in trouble later. Third reason, and this one's just math. There are too many tokens chasing too little capital. In 2017, there were maybe a few thousand crypto projects. 2021, we're talking tens of thousands. Today, my AI scans show over 2.5 million tokens on Ethereum alone, adding Solana, BSC, all the other chains, and we're talking millions of tokens. But the total market cap hasn't grown proportionally. We've basically spread the same amount of capital across 100 times more tokens. Supply and demand, right? When supply explodes and demand stays flat, prices go down. It's that simple. Plus, and this is critical, unlock schedules are absolutely brutal this cycle. These VC-backed projects raised at massive valuations, but only 5 to 10% of tokens were circulating at launch. Now, month after month, millions of dollars worth of tokens are unlocking. Team allocations, investor allocations, every month, new selling pressure. You're not just competing with other buyers, you're fighting against insiders who got in at pennies trying to cash out at dollars. Fourth reason, the money printer isn't running anymore. 2021 was a perfect storm. We had stimulus checks, we had zero interest rates, we had people stuck at home with nothing to do but trade crypto. The Fed was injecting trillions into the economy. That money had to go somewhere, and a lot of it went into risk assets, crypto, growth stocks, NFTs, all of it. 2024, interest rates are still elevated, money is expensive. People can get 5% risk free in treasury bonds. Why would you gamble on some random altcoin when you can get guaranteed returns. The liquidity that fueled the last cycle just isn't there, and when liquidity dries up, the riskiest assets get hit first. That's altcoins. Fifth and final reason crypto is growing up, and growing up is boring. I know nobody wants to hear this, but market maturation means less volatility. As markets become more efficient, as more sophisticated players enter, the easy opportunities disappear. In 2017, you could see a project announce a partnership on Twitter and the token would pump 300% because information traveled slowly and markets were inefficient. Today, that same announcement might move the price 10% because algorithms caught it instantly, because smart money already positioned, because the market's just more efficient. This is what happens in every maturing market. Early days are wild, middle stages are volatile, mature stages are boring but stable. Crypto moving from stage 2 to stage 3. And for retail traders, that means the era of easy 10x returns is over. You can still make money, but it requires way more sophistication that than it used to. So where does this leave you? First, adjust your expectations. If you're waiting for 2021 style alt season where everything pumps 1000%, you're going to be disappointed. That cycle's over. But that doesn't mean there's no opportunity. It just means the opportunity looks different. Quality over quantity matters now. Instead of holding 30 random altcoins hoping one hits, focus on 3 to 5 projects with real fundamentals, real revenue, real users, real products. Timing matters more. Those explosive altcoin moves might still happen, but they're shorter and more violent. You need to be quicker to take profit, and honestly, you not you might too need to accept that Bitcoin and Ethereum are your core holdings now. I know that's boring. I know you didn't get into crypto to make 50% a year, but 50% beats negative 80% every time. The casino isn't closed, but the house adjusted the odds. And if you're still playing with the old strategy, you're going to keep losing. Listen, I'm not trying to be the bearer of bad news here. I'm actually trying to help you make money, real money, not just false hope. The market's changed, that's just reality. But here's what's cool about understanding this. Once you see what's actually happening, you can stop fighting against the current and start swimming with it. The opportunity's still there. It just looks different than it used to, and the faster we all adapt to this new reality, the faster we start winning again instead of watching our portfolios bleed. Now, if you want AI enhanced analysis breaking down which altcoins actually have a shot in this environment, which projects have real fundamentals versus pure hype, subscribe and hit notifications. I'm analyzing data most retail traders never see. I'm cutting through the false hope and showing you what's actually happening with capital flows, with real whale movements, with institutional positioning. Next video, I'm breaking down the three altcoins that might actually survive this cycle and why. Quick reminder, nothing I share is financial advice. This is educational content based on my analysis. Always do your own research. Never invest more than you can afford to lose. And make your own informed decisions. Until then, stay skeptical, stay liquid, and stop buying every dip thinking alt season is coming. I'll see you in the next one.